Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us do now one question of non-integrated cost record where we are required to prepare control accounts plus trial balance plus costing profit and loss account. Let us read question. A company operates separate cost accounting and financial accounting systems. Separate cost accounting and financial accounting means systems are not integrated, therefore it's called as non-integrated costing record system. The following is the list of opening balances as on 1st April 2013 in cost ledger. Stores ledger control account 53,375. Opening debit balance. WIP control account 1,04,595. Opening debit balance. Finished goods control account 30,780. Opening debit balance. General ledger adjustment account 1,88,750. Opening credit balance. Transactions for the quarter ended 30th June 2013 are as under. Material purchased 26,700. Material issued to production 40,000. Material issued for factory repairs 900. Factory wages paid 77,500 including indirect wages 23,000. Production overheads incurred 95,200. Production overheads under absorbed and written off 3,200. This is the important point covered in this question about writing off production overheads. Sales 2,56,000. The company's gross profit is 25% on factory cost. At the end of the quarter, WIP stock increased by 7,500. Prepare the relevant control accounts, costing profit and loss account and general ledger adjustment account to record the above transactions for the quarter ended 30th June 2013. Now in this question, at the end they are asking us just to prepare general ledger adjustment account, but we are required to prepare other accounts that will be considered as working notes so that we can perfectly prepare general ledger adjustment account. We have opened all necessary accounts. Let us start recording information in various ledger accounts. Stores ledger control account, opening debit balance 53,375. Work in progress control account 1,04,595. Finished goods control account 30,780. General ledger adjustment account credit balance 1,88,750. By balance brought down 1,88,750. Transactions for the quarter ended 30th June 2013 are as under. Material purchase 26,700. This will be debited to stores ledger control account and credited to general ledger adjustment account. So general ledger adjustment account, credit side will be writing by stores ledger control account 26,700. Store ledger control account debit side to general ledger adjustment account 26,700. Material issued to production 40,000. This will be debited to work in progress and credited to stores. Work in progress control 40,000. Amount is credited to stores ledger control account. Work in progress control account debit to stores ledger control account 40,000. Material issued for factory repairs stores will be credited and factory overheads will be debited. Stores issued to repairs, issued for repairs, it will be credited to stores ledger control account. It will be treated as factory overheads. By factory overheads control account 900. In factory overheads control account, it will be recorded on debit side. In factory overheads control account debit side to stores ledger control account 900. Factory wages paid total 77,500. This will be debited to wage control account and credited to general ledger adjustment account. Wage control account debit to general ledger control account 77,500. In general ledger adjustment account credit side by wage control account 77,500. Factory wages paid includes indirect wages 23,000. So from 77,500, if we deduct 23,000, we get direct wages, and this balance is indirect wages, which will be treated as factory overheads. Wage control account on credit side by work in progress control account, that is amount of direct wages, total wages 77,500 minus indirect wages 23,000. By factory overheads control account 23,000. This is for indirect wages. Work in progress control account debit side to wage control account. This is for direct wages 54,500. Factory overheads control account debit side to wage control account 23,000. This is for indirect wages. Production overheads incurred 95,200. This will be debited to factory overheads and credited to general ledger adjustment account. Factory overheads control account debit side to general ledger adjustment account 95,200. In general ledger adjustment account credit side by factory overheads control account $95,200. Production overheads under absorbed and written off 3,200. This will be credited to factory overheads control account and debited to costing profit and loss account. In costing profit and loss account on debit side to factory overheads written off 3,200. Sales 2,56,000. This will be debited to general ledger adjustment account and credited to costing profit and loss account, or we can credit it to sales account if we prepare it separately. By general ledger adjustment account, 2,56,000. In general ledger adjustment account, on debit side, to sales, 2,56,000. The company's gross profit is 25% on factory cost. At the end of the quarter, work in progress is increased by 7,500. Company's gross profit is 25% on factory cost. 25%, that is 1/4 on factory cost. Therefore, it is 1/5 on sales. When rate of profit is given on cost like 1/4, we can add one number to denominator to get rate of profit on sales. So 1/4 on cost, 1/5 on sales. If it is 1/5 on cost, 1/6 on sales. So here it is 1/5 on sales. So we can calculate here profit because we have the figure of sales. Sales is 2,56,000. Profit 2,56,000 multiplied by 1/5. It is 51,200. If we deduct profit, we get cost of sales 2,04,800. So here we have calculated cost of sales 2,04,800 after deducting profit from the figure of sales. In cost of sales, on debit side we will be writing to finished goods control account two lakh 4,800, which just now we have calculated. This will be then transferred to costing profit and loss account. Costing profit and loss account debit side to cost of sales 2,04,800. In finished goods control account, on credit side, by cost of sales, reference to note 2,04,800. Work in progress opening is 1,04,595. At the end of the quarter, WIP stock increased by 7,500. 1,04,595 plus 7,500. So closing stock of work in progress will be 1,12,095. Work in progress control account credit side, by balance carried down 1,12,095. This will be then transferred to trial balance. We have recorded all information which is given in the question. Let us close all ledger accounts one by one. Let us close factory overheads control account 1,19,100 minus 3,200. We get balancing figure 1,15,900. This is an amount which is appropriated from factory overheads to work in progress. Work in progress control account on debit side. To factory overheads control account, 1,15,900. We can close now store ledger control account, 80,075 minus 40,900. We get balance 39,175. By balance carried down, this amount will be transferred to trial balance. $3,14,995 minus pre-given closing stock 1,12,095. So difference is 2,02,900. This will be transferred to finished goods. By finished goods control account, 2,02,900. In finished goods control account on debit side, to work in progress control account, 2,02,900. We can close now finished goods control account. $28,880. This is closing balance of finished goods. This will be transferred to trial balance. Wage control account, 77,500. It is tallying sales account, 2,56,000. This will be transferred to costing profit and loss account. Costing profit and loss account credit side. By sales 2,56,000. We can close now costing profit and loss account, 48,000 profit. This will be transferred to general ledger adjustment account. General ledger adjustment account credit side by costing profit and loss account, 48,000. 4,36,150 credit side total of GLA account minus 2,56,000. Balance 1,80,150. This amount will be transferred to trial balance. General ledger adjustment credit balance 1,80,150. Finished goods control account 28,880. Store ledger control account 39,175. Work in progress control account 2 lakh. Work in progress control account closing balance 1,12,095. Trial balance total is 1,80,150. Debits and credits are matching. It shows that we have done all our ledger postings correctly and balanced all accounts correctly. In this question, we have understood how to solve the question when rate of profit like gross profit on factory cost is given. One more point was there relating to closing stock of work in progress, which we are required to find by comparing opening stock. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.